I don't think there's a mathematical equation, but typically sub growth is benefited by strong content. And so there is definitely a correlation there. And particularly right now, given that you're going into the seasonally stronger winter months and you're on the back end of a pull forward. So with Netflix, unlike all of e-commerce, which had strong trends throughout the entire pandemic, Netflix had a very strong first 2 quarters and then really started to lap that. So they essentially borrowed 8 million subs from 2021 into 2020. And then all in, they're probably still on their run rate of mid-20s to upper 20 annual sub ads within this construct of, or this, this framework of there being 540 million households globally outside of China that have broadband. That's going to go to 640 over the next 5 years. And Netflix will just continue to grow within that addressable market.
So, Scott, I mean, if looking at the content slate, and I realize, hey, Tiger King, we've got a high bar to hurdle here with season 2. Side note, but if you look at what's going to get rolled out, so much of it is geared towards international audiences. For a long time now, we've been talking about the saturation of North America. Can they extract as much profit from international subscribers that are signing onto the platform as they can from North American users?
I mean, that's a great point. So there is a lower ARPU outside of the U.S., but it's grinding higher as it is in the U.S. because of pricing increases that the company incorporates annually in each market effectively. So global ARPU for Netflix is rising. The marketing efficiencies that the company gets in the U.S., they don't quite have outside of the U.S. yet. But as they layer in an additional 120 million subs outside the U.S. over the next 5 years, you're going to start to see marketing efficiencies that benefit the business on top of slowing content growth as the business begins to mature. And so you have an operating margin that in 2021 is 20% that should expand to 35%. And on top of that, a company that's required capital up until this point, given the way that they pay for their original content, and that's beginning to flip favorable as well. So the company no longer needs external funding and should be generating the double-digit billions of free cash flow within the next 5 years.
Well, we've been waiting for those free cash flow days. But, I mean, you talk about slowing content growth spending, but it isn't here yet. I mean, everybody's spending more than they've ever spent. And when I say everybody, I mean all the other direct-to-consumer platforms that continue to try to obviously add subscribers. What's it like out there right now, from your opinion? I mean, is everybody going to meet their subscriber goals, or where's it going to come from, when the consumer looks at their bill at home and realizes, wait a second, what am I spending on streaming every month?
The way I think of it is it's a better experience. TV's a better experience today than it was when you could not exclude commercials. And so what you want, when you want, basically expands the size of the market. In other words, like consumers are almost willing to pay more for something that's better than they did historically. So whereas we all look at this as a zero-sum game between Netflix and Hulu and Disney, it's really a transition from linear programming to this new way of watching television, and leading into it what we think is a bigger market. So essentially consumers potentially spending more in the future than they did in the past for this better experience.
So everybody's going to be a winner?
I think that there are, I think companies like Netflix and Disney are clear winners. I wouldn't make the case that every single company that's investing in streaming content will win. Many of the legacy companies in the media industry that are being forced in this direction are offsetting declines in their core business by being here. But, those that are investing aggressively in pure plays like Netflix is leading the way.